Hello everyone, you're watching Weekly Forex Report by Liteforex. Let's have a look at the economic calendar and firstly at what happened on Friday, as America released one of its most famous economic indicators, which is called non-farm payrolls. It turned out that NFP disappointed the market as the reading came out at 133,000 versus the forecast of 185,000. And well, it means that fewer people were hired in America in September. Of course, this sounds very negative for the US currency. However, many analysts think that such poor data may be explained by Hurricane Florence and the fact that it disrupted American economy, and that the situation may improve in October. So the market won't think that this piece of data will be very, very bad for the USD. And actually, if we look at the charts, we will see that the American currency managed to rise versus such commodity currencies as Australian dollar, New Zealand dollar, and Canadian dollar. Although it did fall versus the Japanese yen, the euro, and the British pound. So the figures from the US were mixed, as there were positive developments as well. American unemployment rate declined. Still, for now, the USD declined versus some currencies, but that may be only a temporary reaction. Let's see what economic events lie ahead in the upcoming days, and then we'll switch to the charts to see the dynamics of the main currency pairs. Monday will be light in terms of the economic data. Pay attention to Chinese services PMI, German industrial production, and at the end of the day, Japanese current account. On Tuesday, Germany will release trade balance. There will be a housing starts data in Canada, and these are the key indicators to watch. Wednesday will bring us some action, as there will be a block of data from Britain. It will release monthly GDP growth, and you can see that according to the forecast here, a slowdown is expected. That would be a negative thing for the British pound. And also, industrial production and manufacturing production are scheduled here, and here the forecast on the contrary is positive. So whatever happens, we expect an increase in volatility for the British pound. And during the US session, there will be release of American Producer Price Index. This is an indicator of inflation, and the forecast is positive, so this may give traders a reason to buy back the US dollar versus currencies like yen, euro, and the pound. On Thursday, there will be the release of the European Central Bank's monetary policy accounts. There may be some insights about the ECB's policy. Also, consumer price index from France, some housing data from Canada, and the flow of statistics from the United States will continue, as America will release consumer price index figures, and this is another indicator of inflation. And here the forecasts also are very positive. There are reasons to expect that indeed these forecasts will be true, because oil prices are higher these days, and this will have an impact on US Producer Price Index and Consumer Price Index as well. So the odds are that the reading will be strong, and that will help the US dollar. The final trading day of the week, Friday, will bring us Chinese data, Chinese trade balance, which can have an impact on Australian and New Zealand dollar, as these countries have strong trade ties with China. German CPI, Euro area's industrial production, and finally American Consumer Sentiment Index. You can see that the economic calendar for the upcoming days is not really packed with important events. The main focuses will be Wednesday and Thursday, the data from the UK and US inflation figures. Let's now switch to the charts. And the first chart is Euro dollar. You can see that during the most days of last week, Euro dollar was declining, but then it managed to find support at 1.1460 and actually closed the week above 1.15 mark. 1.15 is where Euro dollar previously found some support. Here, the negative impact on the euro is still provided by problems in Italy, where populist government budget deficit is on the collision course with the European Union. As a result, there are concerns that key world rating agencies may decrease Italy's credit rating, and of course this will be bad for the euro. Although there are talks of some compromise between the government and the EU, this is still a kind of important thing, and this will prevent the euro dollar from strengthening too much. So many analysts think that the advance of the euro dollar, the recovery, will be limited. We will be focused on resistance levels at 1.1560 and 1.1620 ahead of the big resistance at 1.17. Decline below 1.1460 will open the way down lower to the next Fibonacci levels around 1.1410, and well, the ultimate support is at the minimum level of August around 1.13 mark. Switching to the British pound US dollar pair, we can see that here was a break to the upside. A lot of political talk took place in the UK last week. There was a conference of Conservative Party, and the main message out of there is that no deal Brexit is better than bad deal Brexit. Theresa May, the British Prime Minister, is still in power, and this is positive for the British pound. And some rumors of agreement between Britain and the European Union have resurfaced, so that traders were buying the British pound. Much will depend on what the European Union proposes to Britain, and we will find this out on Wednesday when the European chief negotiator Barnier will present his Brexit plan, Brexit program. So there will be even more important events for the British pound on Wednesday. The outlook is positive in the short term. However, remember that nothing is decided yet, and we can easily get some negative news from the UK, which will make the British pound decline. For now, on the daily chart, we can see that the pair broke above the declining wedge and is approaching the resistance around 1.3145. And if it manages to get above this level, we will focus on 1.3220 and 1.33 mark. A return below 1.3050 will be a very negative thing. It will confirm the recent movement to the downside and confirm that this break to the upside was falls, and in this case we will target lower levels, primarily things around 1.2980 and 1.29 marks. Although we see that the near-term outlook has become certainly positive, and the fact that we went above the wedge allows us to expect a more significant and more prominent move to the upside and target 1.32. Japanese yen weakened versus the US dollar during the most part of last week, and we saw that the pair rose to new highs around 114.55. However, by the end of last week, the yen fought back and won, and as a result we got a shooting star candlestick which was formed below resistance at 114.70, and of course this kind of candlestick looks negative, and it presumes that the US dollar will start the week with some declines and will have to correct down to the lower levels below before it will manage to regain its strength. There is the 200-week moving average line around 113.25, and decline below this level will open with a down for 111.50, which is the bottom of the recent uptrend channel for the dollar yen. Here is the daily chart showing that the pair is overbought and willing to correct down. However, notice that the trend is still to the upside, so our main idea is to buy the US dollar on its pullback to the downside, and we'll target support at 111.50 and look for the positive signals when the pair approaches these levels. Australian dollar US dollar made a big leap to the downside this week, as you can see on the weekly chart. It fell below 0.72 and is now on the way to 0.70. The pair is approaching some really long-term lows, and the main reason why we see that is that traders are still concerned by trade wars and the situation at Australian housing market. So even positive figures from Australia make them sell the currency in favor of the USD. So of course the near-term outlook looks rather bad as long as we trade below 0.7090. We focus on 0.70, and lower support is at 0.6830 level. New Zealand dollar also declined versus the USD, and here part of the reason is in the New Zealand's economic data, which are rather weak. So resistance is located at the previous low of 0.65 and then at 0.6550. We can also place resistance to the top of the channel around 0.66 mark, and we are targeting levels around 0.6380, 0.6350 on the downside. The US currency managed to recover versus the Canadian dollar. Here Canadian data were weaker than expected, at least some of Canadian figures, and despite the higher oil prices, Canadian dollar weakened and the US dollar gained. So we are focused on resistance at 1.30. Here we can see a trend line. If the USD Canadian dollar manages to get higher, we will watch 1.3080 and 1.3170. Support is located at 1.2885 and 1.2785. The fact that the pair managed to return above 200-day moving average is certainly a positive thing, and it means that the pair has a chance to trade at higher levels, or at least to consolidate above the previous lows. This is all for today. Thank you for watching, and you can visit liteforex.com for more information about Forex market. And if you are interested in trying to gain on these trade ideas and try to learn how to trade on Forex, you can download a trading terminal from liteforex.com. You can open a demo account and you will find instructions for that in the links below this video. Good luck in your trading and visit liteforex.com.